Stanley Druckenmiller, the legendary investor, is out with some very interesting comments about what he sees transpiring in the market moving forward, what he's waiting for in this market, what he's doing with cash, his positioning in the market, and along with a lot more. And this is obviously a legendary investor. If you're not educated on this gentleman, okay, let me show you something I think that is very important, okay? It is basically said that he got 40% average annual return on multi-billion-dollar hedge fund over 25 years, and supposedly he's gotten like 30% at the one he's in charge of right now, which is kind of like his own family office type deal. And so nonetheless, man's gotten great returns over time. Okay, to give you some context of that, if you start with $1 million and you never add another penny ever, okay, and you do that for 25 years, right, and you get 40% a year on average, right, you're going to have $4.4 billion at the end of the pie, right, so which goes to show you how insane it is to get those sorts of returns, right, and it's absolutely a very impressive feat. This is the equivalent, you can get, if you can get over 20% a year on average, you're doing amazing. If you can get 30 or 40%, I mean, you're talking about, you're like the Tom Brady, the Michael Jordan of stock market investing. You are special at that point in time, which, yeah, man, it's going to add up to a lot of money. So in regards to Stanley, I definitely love to hear his inputs on what he's investing in, where he sees opportunities, where he doesn't see opportunities, his views on the market in general. Because at the end of the day, this man is about 70 years old right now, and he's been in the markets for a long, long time. He's doing great. Doesn't mean everything he says is gospel and everything he says is going to be right? He's going to be wrong, as every single other investor in the market is wrong sometimes. And sometimes you just get it wrong. And so I'm going to enjoy reacting to this one, kind of giving my perspectives and opinions. And I love to hear your guys' opinions and perspectives as always. Appreciate everybody. Subscribe to the channel. We are now 28,000. I think we might be over 28,400 subscribers now. So it's always a new all-time high, man. Not every stock's got to be an all-time high, but this channel is. So I appreciate y'all being here as always, and let's get into this.
The horizon. But the other thing here is, I think it's pretty safe to say you've been pretty critical of fiscal and monetary policy. The question here, and I want to put one more chart on the history of bubbles that you showed the students as well, because the question I have for you there is, do you believe that there are still...
Makeup alert. Oh my gosh, okay? Who they got doing the makeup at Bloomberg? This is a 10 of 10. Like, it doesn't get better than that, folks, okay? It doesn't get better than that.
Policy. The question here, and I want to put one more chart on the history of bubbles that you showed the students as well, because the question I have for you there is, do you believe that there are still many shoes to drop as the central bank stays tight?
That's my central case. I deal in the world of risk reward. There's a 500-year history of asset bubbles well documented.
He basically just said my central case, so kind of like his base case is there's more shoes to drop.
In a book that you had some issues with, The Price of Time. And basically it documents, and I had already known this about the last 100 years, but it's going on for 500 years. Every time you've had a significant asset bubble, economic trouble lay ahead. But yeah, when you had 11 years of free money, people do stupid things. All you have to do is look it up there. But the stupidest is somebody paid $80 billion for Dogecoin, which was invented as a joke. I mean, that can only happen in the world of free money. It also suppressed people worrying about the kind of stuff I just talked about 2 or 3 minutes ago, because you keep rates at zero. But the fact that this was arguably the most disruptive economic period we've had since the late 1800s, and there were no bankruptcies.
It's interesting little chart there.
People worrying about the...
That's interesting. So right here, basically history of asset bubbles, right? Has gold there, the Nikkei there, which is a Japanese stock market, Thailand there. This is definitely one you don't hear talked about. Obviously, the tech bubble there, right? The housing bubble, call it China bubble. I don't know, okay? But anyways, they'll call it that. Biotech, I think it's just, mainly the reason that Chinese stocks have done so horrible is no one trusts Chinese stocks. That's my personal opinion on that. Biotech bubble, Bitcoin bubble, ARK bubble. Oh, that's messed up, man. They had to throw Kathy on there. And then FANG bubble. Interesting. Thing was never a bubble, in my personal opinion.
Stuff I just talked about, 2 or 3.
Just because something goes down in price does not mean it was a bubble before. It's not the way this works, okay?
Ago, because you keep rates at zero. But the fact that this was arguably the most disruptive economic period we've...
Honestly, you can make an argument that tech wasn't a bubble either. That's the funny thing about that. Because all those companies that crashed, right? Look how big tech companies are today. I mean, we're talking about these tech companies are, trillions of dollars in market cap, hundreds of billions of dollars in market cap. So you can make an argument that maybe tech was never actually a bubble. That's an interesting thought.
Since the late 1800s, and there were no bankruptcies. Apparently they've started in the last few weeks. Tells me there's a lot of stuff under the hood when you go from this kind of environment, the biggest, broadest asset bubble ever, and then you jack rates up 500 basis points in a year. I think the probabilities would suggest that Silicon Valley banks, Bed Bath & Beyond, they're probably the tip of the iceberg. Nothing's a guarantee. I've been wrong a lot. I've been right a few times. But our central case is there's more shoes to drop, particularly in addition to the asset markets economically.
What are you most worried about? We'll definitely get to the opportunities and the fat pitches that you see on the horizon. But before we even get there, what starts to sink?
Ooh, good question. Good question.
I could see corporate profits down 20 to 30%. Normally, I would say 40 or 50 in a hard landing. But this recession is so anticipated. I don't think a lot of corporations are going to be caught with their pants down, which is how normally you lose a lot of money is you're not prepared for something that happens. Commercial real estate, I'm not informing anybody in this room of something I don't know, but office is a problem. It would have been a problem anyway, but change of lifestyle and COVID makes it an even bigger problem. Financing rates going up make it a problem. I'm worried about credit tightening.
Yeah, we never really talk about commercial real estate much on the channel. Not the most exciting subject, but I mean, if you look at many of the biggest markets out there, commercial real estate's in a bad place, folks. Rona disrupted that industry in a massive, massive way. There's not nearly the need in many of these massive markets for commercial buildings like there was 4 or 5 years ago. And a lot of those commercial real estate companies are drowning in debt. And some of this debt they're going to try to roll over, but the problem is if they roll this debt over, it's at much higher interest rates than, let's say, 5 years ago, 10 years ago, because obviously we know the interest rate environment right now is not the best. So, yeah.
The next 6 to 9 months, obviously the banks are going into an economic period that if, in fact, we get a recession, their balance sheets are already impaired, not from where they usually lose money, which is loans, from the fact that the Fed convinced them that they're going to keep rates to zero until 24. So they bought a bunch of treasuries yielding 1 or 2%, and now they're carrying them at 5. So their balance sheets are impaired. But if we get in a recession, then the real losses comes, which is stuff like credit cards, commercial real estate, that kind of stuff. So those would be my worries. You asked me my worries. That's different than my predictions.
The predictions, you've been talking about...
I am so tired of being a bear and being labeled a bear.
But to the bearish point of view, we haven't seen it. We have not seen that hard landing yet. And there's going to be many people after you today that are predicting a soft landing. And so to the extent you still believe that a hard landing is ahead of us, when does it come? What does it look like?
Good question.
Do we see it anymore?
Yeah.
By the way, I don't want to gloss over something very important. He just mentioned about, that's my worries, not my prediction. And it's important that we differentiate those as stock market investors. You can be worried about things. It doesn't mean you have to make a bet on that thing, right? There's a lot of things I worry about in the economy or this or that. Doesn't mean I always have to place a bet there. I can place a hedge there if I want to. But the problem is a lot of people have worries, and just understand in the financial markets, there's always a lot of things you're going to be worried about. There's never really like a clear sailing here, because as soon as you get a clear sailing, something happens out of nowhere that you never expected, and next thing you know, it's tough sledding out there. So that's important to differentiate between your feelings of your worries and having to bet on those things happening and saying, I got to sell out all my stocks because I'm worried about ... because I can tell you you're always going to be worried about something in this game.
A lot of people because we haven't had an economic decline start yet, have changed their forecast from a hard landing to a soft landing, and a lot of others have changed it from soft landing to no landing. I haven't changed mine at all. The fact that it hasn't happened yet doesn't change the probability, if it does happen, of the depth of it. I mean, basically, $10 trillion, $5 trillion monetary, $5 trillion fiscal was put in during COVID. What has happened is that created this giant stock of liquidity. I think Jamie Dimon said a couple years ago there were $2.5 trillion excess demand deposits. We've been working that liquidity off slowly. That liquidity shrink was interrupted when Bank of Japan changed YCC. They went in and they bought $400 billion worth of bonds to defend their bond market. Very odd situation. They raised rates, but then liquidity exploded on it. And then obviously the debt ceiling. Secretary Yellen drew down the TGA, that's basically the Treasury savings account, from 700.
Recession probability within 12 months here. Probability from 2 and 10 year spread is the green one. 3-month and 10 year is the orange, and 3-month and 18-month is the blue one there. Wow, it's interesting to see how the 3-month and 18-month forward has really overtaken the other two in quite a substantial way over the past number of months from being the lagger, right? Wow.
And to practically nothing last week. That also ended up in non-issuance of government debt. So that was a big boost to liquidity. All that is set to change now. Actually, the TGA is going to go the other way. She's already stated she wants to build it back up to normal levels. So you're going to have probably about $800 billion in treasuries issued between now and year end. The Fed will be continuing on with QT. You've got the student loan thing, which I think has kept consumption up. That's all changing in September. They're going to have to actually, God forbid, in the United States, somebody actually pays interest on a loan. So to me, the probabilities haven't changed. It's been pushed out relative to expectations, but in no way does the fact that it hasn't started yet change the probability of whether it's going to be hard or soft. I would actually argue, since it's taken so long, the Fed has ended up with a higher terminal rate. And in fact, inflation gets stickier the longer it stays in the system, that it increases, not decreases, the probability of a hard landing. By the way, after the 87 crash, I was convinced we're going to have depression. So I've been wrong before, and if I'm wrong.
So that's a lot of great points he just made there. He obviously mentions right there after the 87 crash, I thought we were going to have a depression. Obviously, that didn't happen, right? And that's why I say, you can get great returns in the market and still be wrong, right? Warren Buffett's been wrong on plenty of opinions of his in the past, and, stocks, and I look at him as such a legendary investor. Everybody can get things wrong, right? And so I think something that's very important that he was talking about here.
Between now and year end, the Fed will be continuing on with QT. You've got the student loan thing.
Right there. The student loan thing, I think that's a very important subject that we're going to have to see how that affects the economy. I think that matters in a significant way. People having to pay back those loans that hadn't been paying them back, that's less money you can spend at local businesses, at big companies, right? And so I am very, very interested to see what effect that has on the economy. It's going to have at least some sort of negative effect, but the question is, how big of a negative effect is it? And that remains to be seen.
And I think September is the first time when I was sort of afraid of booming economy, inflation guy to I'm more worried about growth than I am about inflation. And originally I was fourth quarter of 23. I temporarily maybe lost my mind, or maybe I was right. When the Silicon Valley thing happened and got anecdotals and stuff that has traditionally led, like trucks and retail, moved that up to now. I think I'm probably wrong, and I'm going to go back to the end of 23. But the real answer is I don't know.
So recession or no recession, though, one thing that's interesting, and you included, a lot of people are very encouraged by certain areas of the market, particularly the AI boom.
There's always stuff to do. We had a hard landing in 74, 75, and chemicals and oils and that stuff did great. I'm sorry, go ahead and answer your question.
Well, do you think that...
Boom. Man, is that a great point. That's exactly why I say, regardless of this market, bull market, bear market, kangaroo market, there's always opportunities out there, folks. Always opportunities. There's always companies to buy that are going to do very, very well. Even if the market's stagnant, and even Stanley Druckenmiller, he's made predictions in the past that this decade's going to be a stagnant decade for the indexes. If that happens, you better know how to pick stocks, man. You better know how to run valuations on companies. You better know how to understand financial statements on a high level, income statements, balance sheets, how to run metrics, how to know if you're getting a great deal on a stock or you're getting ripped off on a stock. Those aren't questions you're going to struggle over this next decade, I can tell you that. And if you want to learn all those things, apply for my private group. That is in the description area because we go through everything in detail in a pretty epic way.
All of AI makes it through this recession, or do you think that some areas of the market, particularly in AI, start to look like they're in bubble territory?
Well, all of AI is not going to make it through whether we have a recession or not because they haven't separated the wheat from the chaff yet. But I do believe, unlike crypto, I think AI is real. It could be as transformative as the internet. It's a huge thing.
Wow.
And I think I've already...
As transformative as the internet, he says. Wow. And he also just took a shot at crypto, by the way, because he basically says unlike crypto.
Publicly that if staples can go up in price in a recession, why can't a company like Nvidia, if their orders and earnings go up 70% in a hard landing, which is what I think would probably happen, it's not clear that Nvidia goes down despite the lofty valuation level. History has proved.
Thank you, sir. Thank you.
If you have very good earnings in a recession and they're sustainable, if they're not, the market somehow figures it out, those stocks will do just fine. So we have some longs, we have some shorts, and the AIs have sort of dominated the long portfolio for 5 or 6 months.
How do you think about going short in this market?
Our shorts have been fine this year, except my index shorts, which have been a disaster. But we always short the same way. I just try and look at the current situation, and then I try and think of a situation 12 to 18 months from now based on my forecasts. And I think if I think the security prices are going to be less, then I short them. Frankly, I'm not sure I've ever made money. If I took back the last 40 years, I'm afraid to look. I've never had a down year, but I'm not sure I've made money in shorts. I like it. It's fun.
Wow, that's interesting. Never had a down year. That's crazy. If that's accurate, that's insane, okay? Because everybody has down years. If he really has never had a down year in 40 years, that's mind-blowing, okay? Secondly, never made money from shorts? What? That's also mind-blowing. Those are two crazy things to think all in one. What in the world?
The current situation, and then I try and think of a situation 12 to 18 months from now based on my forecasts, and I think if I think the security prices are going to be less, then I short them. Frankly, I'm not sure I've ever made money. If I took back the last 40 years, I'm afraid to look. I've never had a down year, but I'm not sure I've made money in shorts. I like it. It's fun, but you can get your head handed to you. And it's a game that really only professionals, and the math's against you. If you're dead wrong on a long, you can lose 100%.
Yep.
If you're dead wrong on a short, you can lose 10 times your money. And when I was in short.
Boom. And the other problem is, on a short, you can only make 100%. On a long position, you can make unlimited amount of money. There's so many things that are incentivized, and if you've been watching me for years, you know this. There's so many things you're incentivized by. Government, spending, innovation, obviously, over time, companies just performing well. There's so many things that line up for you as an investor to be a long rather than a short. And one of those is unlimited losses if you're short. if you're long, unlimited gains, right? And on the flip side, you short, 100% is the most you can make, right? Stock goes to zero. When you're long a stock, the world's yours. You know, you can make 800% on a stock, 1,000%, 2,000%, 10,000%, right? There's a lot of those stocks out there that have performed absolutely amazing over time. I've got a couple of those just in the public account. That's been, what have we had for the public account for? 5 years, maybe less than 5 years, something like that, right? And we've already had 3 stocks in that account that were crazy winners, right? 2 that I've held on to, thankfully enough, I still have shares of those, Tesla and Elf, right? And one was Nvidia I held in the public account at one point. Unfortunately, I sold out of it. So, yeah, and took a profit out of that one. I should have held all the way through because that stock's over 10x'd from the price I paid for that stock.
So I shorted $200 million worth of internet stocks in March of 99, and in 3 weeks covered them at a $600 million loss.
Shorted $200 million of stocks, and 3 weeks later, he had to take a $600 million loss?
$600 million on a $200 million investment in 3 weeks. I was short 12 stocks. They all went bankrupt. Every one of them.
He shorted 12 stocks. They all went bankrupt. But he still ended up being the one that lost in that situation because he had to obviously cover those shorts. Oh my gosh, that's insane.
That at home.
So,
well, I mean, to that point, when you look at the AI kind of boom here, are there lessons to be learned from the dot-com bubble?
yeah, there are lessons. There are definitely lessons to be learned. Don't get emotional. Don't get crazy. But I will say this about the AI. Nvidia bottomed in October in the low 100s. It's true, it's 380 or 390. It's in nosebleed territory. If this is a secular move, if this thing is real, you just don't have 10-month moves. That's not how it works. Even the dot-com bubble.
This man is preaching to the choir. What have I been saying for weeks in regards to this whole Nvidia situation? Exactly.
Lasted 2.5 years. For many of the guts of the internet, it lasted 4 years. The Ciscos, the Sun Micros. So could Nvidia go down materially in the short term from any point? Yes, but I would be surprised if I'm right on AI and the impact on it. I mean, it's already making the top coders 7 to 8 times more productive than they were 5 months ago. If it's as big as I think it is, NVIDIA is something we're going to want to own for at least 2 or 3 years, not for 10 months, and maybe longer.
Certainly the topic du jour. There's another thing that a lot of investors are talking about. It's the promise of China. This idea, and it's time to get your global view here because so many people rely on you for the macro perspective. The view here is that the GDP in China will expand faster than the United States, and a lot of investors are kind of shaking off geopolitical tensions on the back of that theory. Do you see the same promise that the China bulls are seeing?
I do not. I was in love with China until about 6 or 7 years ago. You go over there and the energy in Shanghai was like New York on crack. I mean, it's just fantastic energy. The entrepreneurs were exciting. They were into it. And then...
New York had a bad problem with that substance at one point, so it may not have been the best choice of words there, sir.
Xi Jinping did his thing. And if you look at China and the rise of China, I think it all sort of happened. You had this internal capitalist system with a bunch of people that act like crazy New Yorkers, building new businesses in a dynamic economy. But he has proved he's not a capitalist. He's definitely not a monopolist. There's only room for one monopolist in China in his mind, that's him. Anybody that gets their heads stuck up. And I honestly think he either doesn't understand why China grew and succeeded the way they did, or frankly, he doesn't care, because in terms of staying in power. But I would be looking out 10 or 15.
100% in agreement. 100% in agreement.
I just don't see it. Unless there's a change in power there at the top, I think that's going to be a very undynamic economy. It's not so much the geopolitical concerns. I will say this, that if I'm right, it makes me more fearful of military action, because that's when dictators become more dangerous, is when they've got to divert attention from the immediate problem. So what they're doing now is very stimulative. We're expecting a sugar high and some kind of robust growth there, maybe for 6 to 9 months. But looking out, I do not look at them as a big challenge to the United States in terms of economic power and growth.
There's equally been a lot of investor questions about the future of Japan as well. How do you think about the opportunity set and how to invest?
When I went to Soros, Japan set me off like a rocket ship, because I shorted the Nikkei at the top. I had everything, and then I think every trade I made 5 years later and on, I've lost money in Japan. It's been the biggest value trap in history. But I will say,
Japan's been the biggest value trap in history. Oh man, I mean, there's a lot of reasons for that. I mean, I could probably do a 30-minute dedicated video. The main point I'll just bring in regards to Japan. I mean, I'll bring two big points. Why did the Japan stock market stagnate for such a long time, not do anything? Two main reasons. One is they lost their innovation edge. If you go back to certainly the 80s, I mean, Japan was seen as the leader in so many tech industries. United States, we took that mantle from them really in the 90s and moving forward. We took it over from them and we never gave it back. And now all the biggest tech companies in the world, all the ones that matter the most by far to the world, all are American companies, all of them. And that was huge for them. A very, very negative effect, right? If you're going to lose your technology sector like they did in that mantle, right? Because that's just a crazy big opportunity. The second thing is population. I mean, just look at Japan's population over the last few decades. It's going nowhere, and if anything, it's starting to go down. And so Japan's got a population problem as well, right? And there's something we should always keep our eyes on in the United States. The good thing in the United States is, one is, at least most people still have babies, and that's good, okay? The other thing is we're always bringing people to the United States. Now, I think we could bring a lot more people, in my personal opinion, to the United States. There's a lot more quality folks out there in the world than what we're bringing to the United States, in my opinion, right? I think sometimes we're a little too selective, but certainly we're always bringing people to the United States. So the United States shouldn't have a population crisis like Japan has, for instance. And so those are two main reasons why the Japan stock market has done so poorly over time. If you want to throw on a third reason, it was overvalued. I mean, the valuations had climbed to ridiculous levels in Japan back in that time span. I
haven't checked this, but it's by far been the deepest breadth and the best market this year. Yeah, our market's up, I think you said 12%, but it's like 7 stocks and everything else is not even up. That's not the case in Japan. The breadth is tremendous there. You have a couple things going on. They look like they're solving deflation plus, so you're getting nominal growth. They've also, it's more than just talk. They're really into the whole shareholder value thing. And then you got a guy running monetary policy, and he sounds like Jerome Powell 2 years ago. I mean, inflation's taking off there, and he's saying we haven't quite achieved our goal yet, even though he's doubled his goal that is stated. So you put all that together, for now you have a dynamic market. But given my record trading Japan the last 15 years, you should do the opposite of what I say.
I love that. By the way, if you want to watch the rest of it, he just talks a little bit about politics here, and then they ask him if he's got any big pitches to swing at, and basically he doesn't right now. And he said, I'm saving up some cash, hoping to deploy it in 8 to 24 months from now if there's big opportunities out there, which is goes into a lot of the Wall Street thinking right now. Is kind of money on the sideline, hoping for something to shake up the markets big and get the whole indexes down in a substantial way. And unfortunately for a lot of these folks that had that money on the sideline, it's just not working that way. And things are going the other way, and the market's going up more and more. And so now you need the market to have some epic crash just to even get back down to the levels in regards to many of those stocks, you need them to really, I mean, you need such a huge crash just to get these stocks back down to where they were back in Q4 of 2022, never mind lower than that, right? And so that's kind of the tough thing for a lot of folks, and that just is another opportunity in the market. So appreciate you guys joining me as always. For everybody out there hitting 7-figure club that is in the private group, make sure you apply. We'll send you your award free of charge as always. Also 6-figure club for those of you guys that are hitting 6 figures in the market. The application's in the Discord chat in the private group. Send you that one so you get in the Hall of Fame. Patreon squad for those of you guys that now are hitting 5 figures in the Patreon squad. Make sure if you're in the Discord chat, we will send you one of these guys a new 5-figure award. So appreciate y'all as always. Much love and have a great day.